moment. Okay. Okay, guys, let's go. Let's go. Let's go. So we want to talk about range circle and defining ranges. Oh, sorry, and we didn't record it. It was an inspiring one, right? It was an inspiring one. So if you look at GU this morning, GU was based on what we spoke about yesterday, right? We spoke about when we're talking about the types and forms of liquidity yesterday, spoke about some various forms of liquidity where price takes out what we call the previous daily low. And the next liquidity point that price is likely going to take out is going to be the available previous daily high, right? So you can see how price moved from this old daily low, moved to this yesterday's high, right? So that being said, we don't want to make our chart too dirty. We can see that we're just doing a quick, we want to do a quick recap, then we'll just go. So you can see on the daily, we have a V-shaped key level on the daily time frame, which is always likely going to hold, right? Coming also from the contextually, you can see where we are coming from here, right? We took out this previous daily low, right? We created a V-shaped key leg key level, right? Price tapped into it and continued to buy, right? But if we now investigate thoroughly where price actually came from, you would see that on the 30 minutes or 45 minutes, people are still chatting on the group. So you can see that this is a daily key level already, right? This on its own is a daily key level, right? But if you move to the line chart, because the line chart tells us the main story, we can move this to this. This is like a QMR key level on the 45 minutes. That's where price came to play. But beautifully, you can see that same 45 minutes key level. This is a daily key level, right? You know where we are coming from on the daily time frame. This is the daily key level coming from the daily time frame, right? You can see also from here that this daily key level is also overlapping with this. You can see this open close as well, right? You can see that daily key level is overlapping with that particular open close. So you can see two major key levels, the daily key level, which is from this QMR on the 45 minutes, and this open close here, right? You can see, and beautifully, I think on the 30 minutes, I don't know if we had something very beautiful. Okay, let's stay on the 45. So 45 minutes give to us that QMR that is overlapping with this open close, right? And you can also see that we had like an inducement liquidity, right? Can you see we had this a little bit of inducement liquidity? So price came to take out that inducement liquidity. And the moment price took out the inducement liquidity, remember what I said? You can see everything we spoke about yesterday playing out clearly. When we spoke about the forms of liquidity, we spoke about Asian low being taken, price will run to go and take Asian high. Or you see all this drop that happened here. The first liquidity that was taken was this Asian high, and the next liquidity that price ran to straight. You can see the heavy momentum push to the downside, all because they wanted to take out this form of liquidity called the Asian low, right? So you can see on the 45 minutes time frame that this QMR key level here is overlapping with this open close, right? So price took it out, bounced off, and also beautifully known well is that this key level is from the daily V-shaped key level. You can see how price just continue to buy. Remember, trades like this, my highest stop loss I can go for every trade is 10 pips, right? I can only go 10 pips per trade. So the highest I can go per trade is 10 pips. So the highest I can go is 10 pips, right? So this is a 10 pip stops already. We did already a 1 to 3, right? If so, in and out, you are already there. 1 to 3, we're out already. So you can see 1 to 3 hits, price is already retracing. Maybe we might want to create for us another engineered internal range liquidity. Then we'll just continue to buy to the upside because you can see all of this market inefficiency that has been created, right? Price might just want to just give to us a little bit of rebalancing before doing any other thing that it wants to do. So this was what happened on GU this morning, right? So if you followed our teaching from yesterday, from on the types and forms of liquidity, right? So I just wanted to quickly review this so you can see how we're able to come up with a 1 to 3 from here. So beautiful, right? So 1 to 3 gotten. So now let's get back to the business of today. So when you talk about defining ranges, right? So let's talk about defining ranges. When it comes to defining ranges, what we are talking about, we're talking about how a range is being defined. Please mute your mic. Mute your mic, please. So we're talking about how a range is being defined, right? How is a range defined? So one of the ways a range is being defined is that the first way you know a range is being defined is that a range must, in a bullish market structure, right? A range starts with a sweep and a break, right? You know, when you talk about defined ranges, right? One of the ways you know a range that is being defined is that it starts with two major characteristics. Number one, it starts with a sweep. Number two, it starts with a break. So, you know, based on what we have been talking about in the basics of market structure, we said that if a market is actually in a bearish market condition like this, right, the moment you see that price is actually in a bearish market condition like this, I said there are two major characteristics you need to know about this type of structure, right? The basics of market structure. I said every lower low is a external range liquidity, every lower high here, right? Every lower high are known for two things. They are either internal range liquidity or structural points. And I said that they are known for structural points if we trade above two particular structural points, right? The moment we trade above two structural points, it means that price wants to shift its structure. That's so a price trading above two structural points means that price has broken structure and price will continue to move to the upside, right? That is what I said, right? That they are known for two things: break of structure. They are known for structural point. That is, every lower high created is known as a structural point and also known as an internal range liquidity. So structural point, if it trades above the two, Bobochukwu is not on this call. He's sending AU trade. So if it trades above these two structural points, it means a break of structure. If it trades above one structural point, it can also indicate a break of structure, right? So we also said it's not just known as a break of structure, it's also known as internal range liquidity, which means that based on advanced market structure, price moves from internal range liquidity to external range liquidity, right? So you can see the beauty of this. So back to defined ranges. And one of the ways you know that a range has been defined is that the first thing you want to see, if it's a bullish range, right, it must have two things: a strong low and a weak high. The weak high becomes your primary target, right? The weak high becomes your primary target, right? But the strong low is what starts the range. And the characteristics of the strong low is that number one, you are going to see price, you're going to see price sweep liquidity, right? Then the next thing you want to see price do again is that price is going to break structure. So we must see a sweep and a break, right? So now the way a strong high, so now I want to quickly say this, that the way a strong high is created is the same way a weak low is created. So what do I mean? Let's say we have a bullish range, right? So the first thing we want to see is that price must sweep liquidity and break structure and give to us a bullish kind of structure like this, right? Then the same way now, this strong low was created. This strong low, the way it was created was that it swept liquidity and it also broke structure, right? Now, the same way this strong low was created is the same way a weak high will be created. So what that means is that we'll see a liquidity sweep here, right? We'll also see a break of structure. So don't forget now, this weak high becomes your external range liquidity. You see that everything we are teaching, right, from structure to liquidity, everything is still interwoven. Nothing is different, right? It just makes everything, the knowledge, holistic overview, right? So you can see your weak high is also still your external range liquidity because your weak high is still your target in a bullish market condition. So what that means is that, you know, since we're still talking about range cycles, so let's jump a bit, make we jump small. So we know this is our strong low, right? Because the same way the strong low was created, sweep of liquidity, break of structure is the same way the weak high will be created, sweep and break, right? So now, as price was giving us an order flow to the upside like this, you know that price was creating for us consecutive higher lows, higher lows, higher lows, higher lows. And I said to us that whenever the market is actually creating for us consecutive higher lows, understanding the basics of structure, right? I said to us that all of this, there are two major characteristics you need to note. Number one, every higher low that is being created is an internal range liquidity, and every higher high is an external range liquidity. So what that means is that this is a liquidity here, this is a liquidity here, this is also a liquidity, uh, this is a liquid, this is the liquidity here, right? So what price would do is that price will take out all of this internal range liquidity, take out the last one, but price must respect, one way is always see price respect our strong low, right? But what price will do is that take out the most recent internal range liquidity that is closest to the strong low, which we also call our inducement, until price continues to move to the upside. So what you will see here is that price moved from internal range, right, liquidity to external range liquidity, right? So you can see the same. So that is how you get to know when we begin to talk about defined ranges. So you get to know, how do you know that the range is being defined? Simple. The first thing you want to see is Sorry guys, give me a minute. Let me just, I'll be back in like 1 minute, less than a minute, please. Okay, so one of the ways you talk about defined ranges is that you want to see how price sweeps liquidity and breaks structure. Then price will create for us what we call an inducement liquidity or internal range liquidity. I've said it, don't bother yourself about name. It's not name. This business will do, it's a profession of numbers. It's not about name, right? So the same way this one of the ways you know that the range has started, how do you get to know a defined range is what we call a sweep of liquidity, break of structure. Price creates for us inducement liquidity or what people call internal range liquidity, right? Then we want to see price move from internal to external range liquidity, right? So this is the way it works. So price takes out. So when we talk about defined range, you will hear that is where people, and for some of you that are very active on social media, they would hear, you will hear what they say that is called ABC, right? You hear the word ABC. So what that word ABC means there is that it's a simple term. ABC here, this is the A leg, right? This is the B leg, and this is the C leg, right? So the A leg is your strong low, right? This A now is your strong low because the A leg swept liquidity, right? And it also broke structure, right? So your A leg is your strong low, your B leg is your inducement liquidity or your internal range liquidity, and your C leg is your external range liquidity. So that is where you get the concept ABC, right? ABC, ABC, right? ABC. A leg is your strong low, B leg is your inducement liquidity, C leg is your weak high, right? You remember C leg is your weak high, and I said your weak high is also the same as your external range liquidity. So the question we want to ask ourselves is, how do we combine a defined range? How do we use a defined range to understand range circles, right? How do we use it to understand range circle? So when you hear the word from the word circle, right? It's a range circle. It means it's just like saying that something was coming like this, come again, just going in circles and all of those things, right? So not like circle, like cycle, like CIRLCL, no, like circle, like CYCEL, right? So that is what we talk about. So when it comes to how do we now use the defined ranges alongside what we call the range circle? So the first thing you want to know is that the way a range circle starts is the same. The way a range circle starts is by first understanding defined ranges, right? How does a defined range start? A defined range starts by sweep of liquidity, break of structure, then price continues to give to us an order flow. So this is now introducing us to range circle, right? Price begins to give to us order flows to the downside. You begin to see order flows to the downside, right? How do you know this entire range has ended, right? One of the ways you know the range has ended is the same way it started, right? The way a range starts is the same way it ends, right? So you know that the way this range now begins to end is that price is going to sweep liquidity again, break structure, right? So the moment price sweeps liquidity and breaks structure. So you remember what I said? I said the same way a strong high started. So this is our strong high in a range circle. This is our strong high in a range circle. So you can see the first characteristics, you can actually see how this range circle started was that price swept this particular liquidity, and after price swept the particular liquidity, price broke structure, right? Then the same way that particular range circle started is the same way the range circle ended, right? So if this is a strong high, this becomes a weak low, right? The same way the weak low, this becomes a weak low. And I said that this weak low becomes your external range liquidity. So you can see how this also started as well. We swept liquidity here, we also broke structure, right? So you can see from here. So now just mute your mic, please. So you can see the same way a range circle starts, the same way a range starts, a range circle starts is the same way a range ends. But first, you must understand how to define a range, right? If you want to learn how to define a range, you must understand that the first way to a range starts is by sweep of liquidity and break of structure, sweep of liquidity and also a break of structure. So you can see the order flow. The order flow is actually to the downside. So as the order flow is actually to the downside, can you see what price has created for us? Price has given to us consecutive internal range liquidities, right? So you can see this internal range liquidity that is being created, right? You can see all of this internal range liquidity that is being created here. You can see all of this. These are internal range liquidities being created. These are internal range liquidities being created, right? This is what I now call the last resort, the internal range liquidity that is the last resort. So when it comes to range cycle, you must understand that, especially if you have like the sweep of liquidity, especially people who even use the range cycle the most are those who trade lower time frames. Like when we talk about lower time frame, like 30 minutes, 15 minutes, right? Where you can almost spot your sweep of liquidity and break of structure, right? And now, being known that the way we're given this particular order flow to the downside, price has created for us a series of internal range liquidity. So what will price do? You know, the same way this range has started, now this range has ended, right? So the way this range started is the same way the range has ended. It started with a sweep and a break. It ended with a sweep and a break. But don't forget, I said this weak low, right, is also known as your external range liquidity. All of these liquidities being engineered and created are known as your internal range liquidity. So what we are going to see price do is that now that price has broken structure, price will take out this first liquidity here, go in their direction. Somebody will snap and take a screenshot, post on Twitter and say, price sniper entry is going. Before he will make the post finish on Twitter, price has taken him out, move to the next available liquidity. There's another person that is buying from here, it will go in his direction a bit, only for price to just take out all of this liquidity. Only for at the end of the day, what price will do is that price will come to the last resort liquidity close to the strong high. Now, from the word strong high, that strong high, or people use the word protected high, right? Like I said, it's not about the name, right? Can you mute your mic? Who is that? Who is that? Uh-uh. Somebody's mic is on. Only me. Please, can somebody confirm? Somebody's mic is on. Or is it only me that is hearing it? Okay. So don't let us lose our thought process, right? So you can see in the range circle, right? There were people who were willing to buy from this particular liquidity, internal range liquidity, only for price to take them out. Yes, I can. I'll do the setting after this call. So you can see price. There are people that price were looking to sell from this particular liquidity. Price is going to take them out, right? Price is going to take them out. And after price takes them out, price will go to what we call the last resort internal range liquidity, which is the last internal range liquidity that is close to the strong high, or we call it the protected high, right? After price has done that, what can you see again that price has done here? Price has created all of these minor internal range liquidity. People call them minor structure, right? But just the same thing, right? These are minor internal range liquidities that are being created. Minor external range liquidities, sorry. These are minor external range liquidities that are being created, right? Now that we know that the minor external range liquidities are being created, now that price has also taken this internal range liquidity that we can find here, right? This internal range liquidity that we have taken that is close to the strong high. So what will price now do again? Price will take out this one, right? Take out the next one, take out this one, take out this one. Then price will go for the overall external range liquidity. But now the price has actually gone for the overall external range liquidity, it makes a lot of sense, right? It makes a lot of sense because external range liquidity has been taken. Price has also it indicates for us that price has actually broken below this particular external range liquidity. So we can see that structurally we are still bearish because we moved from here on the standing range circle. You can see we moved from here, we moved from internal range liquidity, we moved straight to external range liquidity. So what can you notice here again? Now, you know that our strong high was here, right? This was our strong high because this was a place we had a sweep of liquidity and we had a break of structure, right? So what did you notice price did here? We also have a sweep of liquidity here. So we swept this particular liquidity. So our strong high will move from this high to this one. So this is where our strong high, next strong high now stays. Our next strong high now comes to this place because here we swept liquidity, right? And we have also broken below this particular low. Right now that we have broken below this particular low, what has price done for us? It has created for us an order flow, consecutive lower lows and lower highs until this entire external range liquidity was actually taken. So like I said, in the basics of market structure, I told us that two characteristics, two things you want to pay attention to is number one, these particular highs in a bearish condition like this are known for two things, structural points and internal range liquidity. So now, and I also said it to us that in the basics of market structure, that after every external range liquidity is taken, you are going to see what we call a reversal. And after every internal range liquidity is taken, you are going to see a continuation to that particular trend. Now that price has taken out this external, can we hear me? Now that price has taken out this particular external range liquidity, right? What are we going to see? We want to see price create, because price has created a strong high for us now. The next thing we want to see price create for us is what we call a weak low, right? We want to see price create a weak low by sweep of liquidity again, right? Then break structure, right? The moment price breaks structure, where is price going for? All of the consecutive higher, lower high that are being created, right? Then what we price stop, we want to see price stop at the last resort liquidity, which is the last internal range liquidity close to the strong high, right? And the moment price begins to do all of this, so the moment you see price begin to do all of this, so what do we have here? We have a weak low here, which is our next external range liquidity that we want to see price take. So price sweeps liquidity, price breaks structure, right? Then price begins to go for all the internal range liquidities that are being created, right? And price will stop at the last high, the last internal range liquidity that is close to our strong high. Don't forget our strong high moved from here to this particular point, because one of the ways you know a range has started is by sweep and break, sweep and break. So we can know that this particular range cycle has been completed because price came to the last liquidity, internal range liquidity that is close to the strong high that swept liquidity and broke structure. So this strong high moved from that place to this particular place. Why did we move? Because we swept this liquidity here, we also broke structure here. So we swept liquidity, we broke structure, and we continue to give to us an order flow, this order flow to the downside, right? So now we have a new weak low. So what do we expect price to do? As price was given to us, you know, after every external range liquidity is taken, we have what we call a reversal. So now for the reversal, price was given to us a reversal order flow to the upside like this, right? So what do we mean? All of these lower, higher lows, higher lows, higher lows, and higher lows are all internal, external liquidities that needs to go. So price will take this out like this, like this, like this, until the main external range liquidity is taken. Somebody. Okay, somebody has a question, David Berry. Okay, Mr. David Berry, ask your question now. Ask your question now. Because this class was supposed to end by 12, but we are already 12:35. But me.
All right, so can you hear me?
Mr. David Berry, unmute your mic.
I'm speaking now. Can you hear me?
Hello?
Can you hear me, sir?
Okay, I can hear you now. Speak.
Okay, my question is, what if we fail to have a break of structure? Like that our weak low now. What if
Sorry,
price,
can you start again? Start again,
what if we
please.
have, okay, the weak low, what
Mm-hmm.
if price hits it? Does our new strong high, does it still remain valid?
Sorry, sir,
If
please.
we
Can
have
you
a sweep and not a break of,
hold on, sir. Can you do me a favor and speak up and just get closer to your mic a bit? I'm straining myself. I'm really struggling to hear you.
okay, let me just type, let me type.
No, speak. I can hear you.
All right, my question is, according to the range cycle,
Yes.
after we take out weak low, our
Mm.
next strong high becomes new high that swept and broke
Mm.
structure. Then the question here, what if we have a sweep of the weak low, not a break of structure? Does that still validate our new strong high?
Mm. Okay, sorry, hold on. Does anybody here understand what he's saying? So that the person can just explain to me, right? Anybody who understands can speak up for me. I don't mind, please. He said,
I've sent it to the chat.
okay, he said, what if we don't have a sweep and a break on a weak low? Okay, there are times, yes, that was a beautiful one. You know, the market is not stereotyped, right? It's not like, it's not static. That's what I'm trying to say. Not like it's not dynamic. It's not, the market is dynamic in nature, but it's not static. So what that means is that it doesn't do the same thing all the time. There are days that price will give to you a strong high, and the weak low is not going to give to you a sweep and a break, right? Just know that when you know, first thing you need to even train yourself to understand is how a range cycle starts, right? By defined ranges, by sweep of liquidity and break of structure. And this always happens either at the top right or at the bottom left. At the top right, at the top left or bottom left, right? So that is why you always hear people say, look to the left, right? So when you look to the left, if you see where the range cycle started from, right? So you see where we had the break of the sweep of liquidity, the break of structure, right? Just know that the next liquidity point that is there, right? That week, the week high or the week low might not sweep liquidity, right? It might just be standing there, right? But we know that since this is where the range cycle started from, we know that that high becomes a week, it becomes like a week high or low, right? So we'll look at examples, right? So you can see range cycle is very, very important, very, very important, right? It will, in fact, if you understand it, it will help you build a lot of patience to wait for trades, and it even help you to understand if you are following the order flow. Okay, I said, what if we had a sweep of what if we had a sweep of the week low and not a break? Will our new strong high still be valid? What if we have a sweep of our week low, okay, and not a break? Will our new strong high still be valid? Okay, I think I understand what he's trying to say. I understand the question. So he's saying something like this. So let's just quickly run up. So he's saying, what if we have for example, we have a range cycle that starts with a strong high, right? Then price begins to give to us an order flow to the downside like this, right? We are seeing that order flow, and like this. So we have, don't forget, this is our week low, right? Now price comes to the last resort liquidity, which is the last internal range liquidity close to the strong high. And he said, what if we tap, we sweep this week low and not break, like not break below it, right? What if we sweep this week low and not break below it? Okay, will our new strong high still be valid? Yes, if we sweep this, if we just sweep, for example, we do something like this. So let me show you what we're talking about. So don't forget, this becomes our week low, right? So this becomes our week low. So what price actually did for us was that instead of breaking below it and closing below it as a body, right, it now swept it, closed above it as a wick, right? It now closed above it as a wick, like this. So after sweeping, it closed above it as a wick. So now what happened here was that we swept the external range liquidity, but we did not break below it. So there's every tendency, just like you said, which is a very, very beautiful question. There's every tendency that, because if you move to the line chart, as long as this week low, now follow what I'm saying carefully, as long as this week low was not broken, right, it was only swept, there's every possibility now that this strong high is still valid, but this strong high, this strong high is still valid, right? But this particular strong high is low probability, because what happens is that there's every possibility that price is going to use, right? There's a 90% chance that price is going to use this particular high as our next liquidity before price moves in this direction. So we are likely going to see something like this. Price will take out this high, then continue to drop to the downside until this liquidity is taken. Because if we only had a sweep, we did not have a break. When you move to the line chart, you will see that this low is still your external range liquidity that has not been broken, right? This new strong high is invalid. It becomes invalid, right? It still becomes invalid. The price can use it as our next liquidity point, as our next internal range liquidity that needs to be taken before price continues to move in its direction. But if it closes below it as a body, right, we know that our new strong highs moves from this to this particular one. But if it sweeps above it, if it just sweeps it and it closes above it, right, this new strong high becomes very low, very, very low probability, because price is likely going to come back to use it as our last internal range liquidity close to the strong high and drop. When you begin to go through, I don't know if I made mention of this during our when we're talking about advanced market structure. I told us that there are two major price deliveries in advanced market structure. We have this ABC, where price takes out the B leg, internal range liquidity, and moves to the A leg, right? Then the second one is the second type of price delivery is just something similar to this, which is something Mr. David asked, which is very good. Something like this, price begins to give to you an order flow to the upside. Price will trade lower, but it will not take out. Okay, let's put context to this so that it will make a lot of sense. It will make a lot of sense for us. So, for example, you see price sweep liquidity and break structure, then give to us a high. So we have our strong high, price has swept liquidity, broken structure, right? We have our strong low. We have our strong low after price swept liquidity and broke structure. So price will trade a bit lower like this. This is the second type of price delivery in advanced market structure. Price will trade a bit lower like this, but it won't take out this low. What price will do is that it won't take out this low, right? Price might react from a particular level, like a key level or something here. Then after price does that, it will trade above, but it won't take out this our external range liquidity, right? So one of the things you now begin to understand about this second type of price delivery is that after price has actually created, please mute your mic. After price has created a strong low, how did price create a strong low, right? It created a strong low by sweep and a break. So after we had a sweep and break, we had our strong low, then we had this our external range liquidity still standing. So inside of the strong low from this strong low to this external range liquidity that is still standing, right? You can see price traded very low, but could not take out the strong low. Then price traded very high, could not take out the strong high, right? So one of the things you now begin to know is that this is what we call engineered internal range liquidity, right? Which means that there's every possibility that price is going to come back like this, right? Price will take this internal range liquidity that is being engineered, then continue to move to the upside. So you can see if price does not deliver like this, price is always going to deliver like this. Creates a strong low, create an external range liquidity, trades lower, cannot take out the strong low, trades higher, did not take out the weak high, right? Only for price to come back to take out the lowest low, which is going to be like our engineered internal range liquidity, and continue to move to the upside. In this type of price delivery, you will see that what price can do sometimes, there are many times that in price would not even trade very close to this point, but there are also times that price would trade above this external range liquidity. It will sweep it. The moment it sweeps it, it will close below it, right? So what it did was the price came to sweep the external range liquidity, right? But it did not close above it. So we might have something like this, right? But many times we don't have something like this, but sometimes we can have something like this. So what that means is that because if you move to a line chart, you will see that this external range liquidity has not been broken, right? It's still very intact, although it has been swept, but this external range liquidity has not been broken. What that means is that the lowest low, which is going to be our engineered internal range liquidity that is close to the strong low, is what price is going to take out as your internal range liquidity until we break above this external range liquidity. Mr. David Berry, did I answer your question?
Yes, sir. Yes, sir. Thank you so much.
Oh, Mr. Fortman, can I ask a question?
Yes, you asked. Okay, you know what? Hold on. We have used another 40 minutes already, which is almost over. So hold on. I want to end this one. I'll send another link. Everybody can join so we can take your questions from there.